Hello guys, and welcome back to the weekly market update from Zylostar.
Geopolitical tensions eased as the Strait of Hormuz remained open, reducing fears of global supply disruption. Global stocks stayed near record highs as investors focused on inflation and interest rate.
Yes, Kevin Warsh actually has strengthened his vows to try to fight inflation as much as possible, which reduced investors' expectations for interest rates to increase on a shorter term. Let's see how that is looking on chart. All right, everyone, here we are kicking off our weekly market outlook, starting with NASDAQ. As I have been highlighting for you guys, the up rally on NASDAQ is tarnishing due to the AI bubble being more of a concern to a lot of investors nowadays, and we can see weakening candles to the upside technically. And from all-time highs, actually, we have a lot of technical confirmations for a short in here. It's pretty nice market structure. And even though we have a very big green candle here, guys, if we combine it with other technical factors, we will see that this candle is a retracement candle, aka shorts being closed by shorter term traders, or let's say day to weekly traders, I'd say swing traders also. So it is not really any indication that there is demand on NASDAQ. Matter of fact, if we look at the previous candle, this candle is way more interesting, actually, the red one, rather than the green. So we had actually a lot of bearish confirmations here for shorts in the previous week, and it had reached exactly to what we anticipate. Of course, our support would be the targeted price for your trade. This is what has been highlighted also. Now, we have a lot of bearish factors here that gives us a technical insights. Why should NASDAQ actually break below the support rather than go up? There is a possibility for retracement to the upside, but it is not as likely to happen because of the AI bubble being more concerned, as I had mentioned earlier, and also because, yes, Elon Musk is about to be a trillionaire, but let's look about the facts in SpaceX, as I've been highlighting for you guys for 2 weeks already. So, same analysis, same outlook. First expectation actually for this price to go down is to 28,000. That should be our first target. And second target actually is 27,000. So those two targets are very likely to come very soon on NASDAQ. Of course, it's not a financial advice, just analysis and insights. Be very cautious about your risk management, but this is my insights, guys, and hopefully you guys make some pretty good stuff on it. Now, there is a slight possibility for the price to go up, but it is most likely not to happen. All right, so this is about NASDAQ. Going into gold. Also, gold had made a smaller retracement rather than a deeper retracement as we anticipated, and we could see that it also had went to support again, and from here it actually gave us a lot of technical movements, gave us indications that gold has started to be bullishly moving, not necessarily impulsively to the upside, because we still don't have the fundamentals and reasons to support it as in the time being. But this here, actually, for a lot of technical reasoning, it looks very attractive for why we are seeing gold to be bullish for the next week. We're having a break and retest, a liquidity grab, another liquidity grab, an ascending triangle, a bull flag, and we have a failure in a continuation in a mid-term downtrend, I'd say, on gold. So all these technical factors in here, guys, give me that understanding that we should see a bullish week to come on gold, targeting actually this support for an instant. Now, also, the fundamental outlook remains the same, as multiple banks are still looking for $5,000 per ounce to be the target on gold by the end of 2026 up to early 2027. So that remains the case. And also, as I had highlighted in the introduction this morning, there are good anticipation that the interest rates now are not to be cut, and that's why we saw a bullish sentiment on gold to start pumping into the market. And what had I highlighted for you guys in the past week? There is a very good possibility that we don't see an increase in interest rate hikes by the end of July, and that is the expectations for that increase to come is the reason why the sentiment on gold is bearish for now. But we have a huge demand on gold. Even though the prices are falling, we still have a huge demand on gold. I'm speaking of physical market wise. The demand is still high and the supply is not meeting the demand, even though the prices are falling. So this also is a very good insight and indication that we are most likely to see a very, very interesting bull run to come on gold very soon. So that's about gold. Going to Euro USD. Now looking at Euro USD, also we had anticipated a continuation in a movement to the downside. However, we did expect a decent retracement to this resistance, filling this fair value gap, but the down run was actually way more effective than usually it should be. However, from here, we saw an impulsive movement to the upside to this resistance. We can anticipate another attempt to break below the support, and a movement to the downside further than that is not very likely. All right, and a movement to the upside is probably going to happen as some sort of retracement. Yet, sentiment is playing a huge factor on Euro USD for a longer period of time. When I speak of that, we're analyzing on weekly basis. Of course, on daily basis, you will get multiple confirmations to enter here and there. And this is how I prefer to trade Forex on daily basis. Yet, since we are given this outlook, sentiment is playing a very decent role to impact the direction of Euro USD rather than technicals and fundamentals also on a longer run. So this is about Euro USD. Looking at Nifty 50, we also, as we had anticipated, we saw that retracement to the downside, and from here we can expect a most probable continuation to the upside, retesting this resistance level. All right, that's about Nifty 50. Let's go into Bitcoin. Looking at Bitcoin, I had highlighted for you guys in the previous week that there is some sort of bearish flag is forming, and this is actually a decent cause. What caused Bitcoin technically to continue falling to the downside. However, technically also we have a lot of factors here telling us that there is bullish sentiment upon Bitcoin, and there are actually a lot of factors I've been highlighting for weeks. For those who watch the videos every week, guys, you already know it's still the same outlook. I am not very advocative to trade Bitcoin on daily, right, on a shorter term, but on a longer term, I'm still very, very bullish on Bitcoin due to the AI bubble looming there in the horizon, due to the money that is being taken out from crypto to go into AI, due to that crypto had already proved itself in the previous year and the capability it can bring to the table. And also the longer outlook about the global economy. Crypto, guys, is still a huge factor to contribute into finance sooner or later. By 2030, I'm expecting results to be already there. And we can already see that we have rejection. This price here had actually taken liquidity from this support, which if we go to a bigger time scale, we can see that this is a very, very strong support. And from here, we can see liquidity is being drawn. And then we had multiple rejections. So we could actually possibly see a bullish movement to start on Bitcoin from here to the upside. And I always advocate, it's not a financial advice, of course, speaking of my behavior, actions, analysis, that if somebody wants to take a part in Bitcoin, it is better to be an investment on a short term, if not for a long term. If we speak about for 6 months to 1 year holding Bitcoin from the current price right now. So that will be it, guys, about our weekly market updates. I'm going to pass the microphone to Mr. Median from London. Perhaps he can give you some good insights. It's always good to hear from you, Mr. Median.
Wonderful. Thank you so much for sharing your analysis. Here is Amir Amidian, Master of Finance and Investment in the UK, and also financial market analyst at Zylostar. Last week, the ceasefire between Iran and the US got violated, and also we received different CPI numbers from the Canada and also Australia. Let's have a look. Greeting everyone, welcome back to another weekly market update hosted by Zylostar. Last week, financial markets faced a huge volatility on Friday at the end of the week, as Iran and the US ceasefire got violated again. So the Iran fired drones at a Singapore flag cargo in the Persian Gulf in the Strait of Hormuz on Thursday. Trump called it a foolish violation of the ceasefire, and the US struck back overnight on Friday, hitting Iranian missile and drone storage facilities. And also from the United Kingdom, we have another boost of volatility into the financial markets as the latest Prime Minister Keir Starmer resigned from the office, and now the Labour Party is going to be governed by Andy Burnham in the United Kingdom. It altogether increased the fears, as I mentioned earlier. Now let's have a look to the different economic indicators from the different regions. First, I want to start with the GDP in the United States. In the United States, the second revision of the GDP release revised up by 0.5%, and now for the last quarter of 2026, the prior quarter, we had 2.1% growth rate for the United States. Tech, government, and manufacturing led the charge, though consumers and retailers are still struggling. The numbers were even better than first thought, helped by Americans buying less from abroad, likely a side effect of the Iran war chaos, rattling the global supply chain. In Australia, inflation is cooling, but only on the surface. Prices rose by 4% over the past year, slightly better than the last month by 4.2%. But the underlying picture is trickier. The core inflation measure, as you can see here, actually ticked up to 3.6%, meaning the worst of the price pain isn't fully gone. Housing is still the biggest contributor at 6.5%, making everyday life expensive even as the headline number improves. Canada's inflation jumped to 3.2% in May, the wrong direction and way faster than the April's 2.8%. Gas prices are the main culprit, but even if we take the gas away from the inflation numbers, underlying prices are still creeping higher. Nowhere to hide. Bad timing for the Bank of Canada, which now faces more pressure to keep the rates higher for longer, just as the economy is slowing. And as you can see here, the latest updates regarding the inflation is here from the Bank of Canada. Now, after reviewing the updates regarding the last week events such as economic indicators as we reviewed and also geopolitics, it's time to have a look to the upcoming week. For the next week, the most important event, or better say the economic indicator, will be on 2nd of July, Thursday, as we are going to receive the NFP or non-farm payrolls, the best economic indicator to track the strength and the health of the labor market in the United States. Worth mentioning, also the GDP from the Canadian dollar will be released on 30th of June, Tuesday, and also at the middle of the week, 1st of July, the Fed Chairman Vash speaks will be released, and also the Bank of England Governor Bailey will be also speaking, and also eventually the ISM manufacturing PMI will be released at the same time in the same day. Stay tuned with Zylostar and see you next week.
Thank you guys for watching. Feel free to drop a like, a comment, and see you on the next one.